and welcome to the Global View, and welcome to ausbiz for the 31st of October. I'm Nadine Blaney. Wonderful to be here with you. So, big night on Wall Street. We saw Wall Street indices pairing gains to close lower. Not before the Nasdaq hit a record high, though. Corporate earnings very much front of mind, as well as economic growth. After the bell, Facebook, or Meta, reported. It beat the street, but shares edged more than 2% lower in extended trading, as it warned of a significant acceleration in AI-related infrastructure expenses. Microsoft climbed ahead of the report, lifted by Google's results a day prior. After the bell, it reported, and it also beat the street on both the profit and revenue lines for the quarter. Azure revenue grew 33%, with Microsoft's AI investments driving customer growth in its cloud business. Shares in Microsoft were up about 1% in after-hours trade. Casting a pall across the broader markets, though, were U.S. chip stocks. They fell after AMD's downbeat fourth quarter revenue forecast, bringing NVIDIA and Broadcom shares down as well. Caterpillar shares fell after lowering its full-year sales forecasts and a third-quarter profit miss, so we'll be watching for read-through when it comes to Seven Group shares here locally off the back of that. First Solar was down after lowering annual sales forecast, Chipotle Mexican Grill on a third-quarter sales miss, and tepid margins. Wingstop absolutely hammered after a third-quarter profit miss on higher costs. Kraft lost ground, again after a third-quarter revenue miss. But Visa, you can see at the bottom of the screen, up by close to 3%, pushing higher as its fourth-quarter results beat estimates. Reddit had a bumper session, jumping to a record high as AI deals boost its fourth-quarter revenue forecast. Dropbox shares rose as it cut its workforce. Eli Lilly was a one to watch as well. Shares were hammered after its weight loss drug sales missed estimates. On the macro front, from July through September, the U.S. economy grew by 2.8%, with consumer spending increasing at its fastest pace in 1.5 years. The ADP private sector employment report rose by 233,000, way above estimates, and the number suggests that private payrolls grew at 2.6 times the 900,000 analysts expect from the non-farm payroll report that's due on Friday. Core PCE inflation was 2.2% year-on-year, showing that inflation does continue to slow sharply. Pending home sales in September rose sharply, up 7.4% month-on-month, the most in 4 years. The National Association of Realtors chief economist expects further gains if the economy continues to add jobs, inventory levels grow, and mortgage rates hold steady. In the Eurozone, GDP in the third quarter was stronger than expected at 0.4% quarter-on-quarter, but there was a downward revision to the second quarter, keeping annual GDP at a pretty paltry 0.2% year-on-year. The UK budget delivered the biggest tax increases in 3 decades. The US 10-year rose to 4.26%. Markets are pricing in a 90% chance the Fed funds rate will be cut by 25 basis points at the next meeting on the 7th of November. The US dollar index was down 0.3% on the day. The Aussie rose from 65.96. It's currently at 65.7. Looking at commodities overnight, and in New York, BHP was off by more than 1%, Rio 1.4%. Brent crude futures rose, though, by close to 2%, as U.S. gasoline and crude stockpiles fell unexpectedly last week. Copper and iron ore fell, and gold, unstoppable, hit yet another record high, up by 0.5%. And just taking a look at Bitcoin, it did ease slightly. It's now trading at 72,379. So to get a view on markets, and a couple of local companies as well, I spoke earlier with Isaiah El-Sherbini. He's from Maqro Capital. Let's take a listen to his view on where markets sit right now.
Obviously, it's no secret that this week is something that markets have been sort of anticipating for quite some time. We have five of the Mag 7's earning reports coming out this week, and of course, the presidential election early next week, along with the rate cut decision as well. So there's quite a lot of information and inputs for all market participants to sort of be taking in and analyzing. And what we've now seen is that following some solid growth from the US economy, it seems that markets are potentially trimming their expectation of the continued rate cuts. So there is still about a 96% chance of a rate cut next week on November 6th to the 7th. But the expectation of a rate cut in December looks to have come down a little bit to around 70%. So just in terms of seeing that strength in the economy, we're now unsure as to whether we're still going to have that trajectory of ongoing rate cuts in the US. And it seems that as well, consumer spending seems to be at its currently at its highest level since early 2023. And we've also seen hiring by US companies accelerate by the most that it has over the last 12 months. So there is a lot of data coming out there. And then in terms of earnings as well, so after the closing bell yesterday, we saw Alphabet shares go up by 4% as they exceeded their expectations. However, I'm sure we're all aware of what we saw occur on Super Micro Computer when they had a woeful session last night, dropping by over 30% after their auditors, EY, have walked out, saying that they're not able to rely on the communication from the audit committee or the management in terms of their forecasts and general reportings. Now, coming to our local picture, the SPY future is pointing to a modest decline of 0.1% today. However, we can see that there may be a boost from oil prices, as we have seen that 2% increase in price overnight. So when I was on ausbiz speaking with Andrew a fortnight ago, I did share the charts for the XJO where there was a few different scenarios that I could have seen sort of unfolding. And it seems like we're looking at scenario 2 at the moment. So we have come back down to that mid sort of level. We now potentially could see a further decline down to that next area of support below where scenario 2's arrow is pointing. But of course, depending on what we see coming out of the States next week, will greatly dictate that.
Okay, so that is a view on the local market. And of course, just flesh out the earnings picture in the United States in a little bit more detail, because Meta falling after the bell in the wake of its results, Microsoft rising in extended trade after the results. And a lot of it is coming down to these AI expectations. Facebook warning that it's going to have to spend a lot more on AI infrastructure. So net so far looks to be a bit of a mixed picture coming from tech.
Yeah, correct. So the AI space, has sort of been booming over the last little while, and they were expecting that increase in the share price would also be sort of relevant to its increase in its overall performance and future prospects, which does seem to be a little bit in doubt at the moment. So it is just going to have to be a sort of picture where we wait to see what occurs and how they're going to be meeting those expectations moving forward.
Okay. And generally speaking, are we looking at pretty favorable earnings? I note that we did have that consumer spending component of the GDP read, blowing through all expectations. But if you look at some of the consumer-related stocks, I'm thinking Chipotle, I'm thinking Wingstop, I'm thinking, that it's not all roses when it comes to the earnings picture being painted.
No, definitely not, unfortunately. It has been an extremely mixed backdrop. And I think as well, market participants are also just really waiting to see what occurs next week, as that will dictate a lot of the direction that we can see for markets moving forward.
Okay, so let's talk a little bit about what's going on here. Yesterday we had Woolworths absolutely smashed as it updated on its quarterly sales, warning about the Australian food business. Today we hear from Coles. I note that one of the brokers today, Jeffries, saying, look, it's just too early to get into either Woolworths or Coles, still has a hold rating on the stock. What technically can we look to for Coles and Woolworths?
Yeah, so Coles and Woolworths, if we have a look over sort of the last 5 years, their charts have been very much there was a lot of correlation between them. However, what we've seen more recently is that from about April to September, both stocks have had a nice increase of about 20 to 22%. But whereas Coles has only retraced about halfway back down to an important level of support there, around $17, Woolworths has actually come all the way back down, sort of where the rally had actually begun back in April. So technically speaking, Coles currently has a much nicer setup than Woolworths does. So the chart you can see there, that is Woolworths, where we see that after that rally from April to September, prices returned all the way back down. Whereas if we compare that to Coles, you'll see that it had a very similar sort of rally to the upside. However, it has only come back down to retrace about halfway. So there should also be a chart comparing the two side by side, where we'll see that the blue and grey candlesticks above, that's Coles share price, whereas the lower one there is Woolworths being in green and red. Now you can see over the past sort of 5 years, there has been a lot of correlation, but in that sort of April time when the rally started, we see quite a large divergence in the two share prices. Again, noting that Coles has actually managed to maintain its share price a lot better than Woolworths has, where Woolworths has come falling all the way back down to where the rally began.
Wow. Okay. Thank you for detailing that for us. So just a thought on today. I mean, we've mentioned that SPY futures are pointing to a bit of a drop at the open. Oil price potentially might provide a bit of support, but technically, how is the local market looking, Isaiah?
It's looking quite bearish, to be completely honest with you. So again, on that chart on the XJO, yesterday we had a very bearish close below an important area of support and an important demand level. So the scenario one was that if that zone was to hold, we could see further prices to push to the upside and create a new all-time high. Now that that zone seems to have failed with yesterday's candle closing below, it is more likely that we're heading lower before going any higher.
All right. One stock I dare say we'll be watching very closely when the market opens is JB Hi-Fi. Put out a sales update with total sales up 4.9%. For the good guys, up by 5.3%. The company, which doesn't provide guidance, did say that it was pleased with the FY25 sales for the month of September as it enters into the important second quarter trading period. Also, telling shareholders at the AGM today that in a tough retail environment, execution is vital, saying the group will continue to prove its value to customers, especially during key events like Black Friday and Boxing Day. And just before we go, a little bit of a check-in as to where we're expecting to open today, down by about 0.2%, just moments away. And I've got a guest host in studio with me, David Scott. Scotty will be joining me for the open, which is next.